I'm Tim Fernholz. I'm a fellow here at the New America Foundation, and I'm joined by Mike Konczal, who's a fellow at the Roosevelt Institute. And we just finished up an event on problems in the mortgage servicing industry. We're going to talk a little bit more about that now. And I guess one of the things I don't think people realize is that these problems are not going away anytime soon.
That's correct. By any estimate, we're going to have at least 2 million foreclosures next year, and then 2 million foreclosures the year after that. That's been about the pace we've had over this past year, which is 2010, and then 2009 before it. So as far as the eye can see is that we're in a normal where the industry can only process so many foreclosures a year, either through just the normal channels themselves or because they want to manipulate the amount of stock out there to keep property values relatively high. Their shadow inventory is relatively manageable. So as far as anyone can see, this will be a problem going into the next couple of years.
And, we talked about a bunch of solutions to this foreclosure problem at the event, but what does it mean for the bigger economic picture that this is going to be the state of play for the next couple of years?
Well, it's a tremendous amount of uncertainty. Foreclosures have both spillover effects, so they affect the property values of their neighbors, which brings down the property their value, which makes them more leveraged, which means they're more likely to default. It impacts the ability of people to move to pursue new jobs. So you have a lot of people who could move to a new city or across town or further away to pursue new job opportunities, keeping the economy growing, but can't because they can't sell their home, either through a short sale or through any other type of mechanism. There's a huge amount of devastation in the municipality budgets. They cost, through the losses of tax revenue and through the fact that so many costs are now shifted from, homeowners and banks to the local government. That affects their ability to spend on teacher salaries, affects their ability to, hire people and keep a certain amount of aggregate demand going through a bad time.
And, what's the relationship with unemployment? Is unemployment driving the foreclosure crisis? Is it being driven by it?
It's certainly driving foreclosures and defaults more generally. So there is a very obvious relationship between people who are losing their jobs, people who have been unemployed for 99 weeks. The median duration is very high for people who don't even have unemployment insurance. Like, it takes a long time to find a job in our economy, a much longer time than it has in the past. And that makes it harder for people who don't have a lot of savings period to keep up with their bills. So obviously unemployment is driving that. How much is the foreclosure crisis driving unemployment? It's not certain. The IMF concluded that maybe about 1 to 1.25 points of unemployment is driven by something to do with foreclosures. Other estimates vary around 1%. That's more than 1 million people. It's quite a large number of people who are unemployed because of basic policy decisions we've made with how this foreclosure crisis will play out.